Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Steve Saretsky. He's a Vancouver-based realtor online at SteveSaretsky.com. His email, steve@SteveSaretsky.com, and you can find him on Twitter at Steve Saretsky. Steve, welcome back to the show.
Thanks for having me on.
Steve, how are the January stats looking?
Pretty similar to kind of what we anticipated. And we've done a lot of these calls, once a month here. So as I kind of, mentioned to the listeners last time, is that we're kind of out of the initial discussions of pent-up demand and really just turning into a new bull market in housing. So I understand for a lot of people that's very hard to square given the economic outlook, but it is what it is. It's a function of liquidity. And so if you look at the sales numbers, you had Greater Vancouver home sales up 53%, new all-time highs, so record home sales for January. Actually, sorry, I think it was the only other month that surpassed it was January of 2016. Now, for anybody that needs a history lesson, January of 2016 was kind of the peak of sort of the last peak that we had in the housing market, where we had, record amounts of inflows from offshore investment, obviously a lot of money coming over from China. That's when we had, rampant speculation. You had house prices going up 35% on a year-over-year basis. So, when we consider the fact that we have sales basically just off those 2016 peak numbers in the midst of, again, this sort of pandemic and weak labor market, and no immigration or real, not a whole lot of foreign investment today, it's quite impressive.
What's the latest on mortgage lending?
Yeah, so again, this is kind of like the one indicator that I look for. I mean, I understand that, it's funny. I can imagine what the comments are going to be like when we post this interview is that, this guy's shilling or whatever, but I just try to follow the data. It is what it is. And so all you have to do is look at residential mortgage credit growth. So that's growing on a year-over-year basis. The latest figure we have as of November, it continues to accelerate higher. But you have residential mortgage credit growth growing at over 7.5% year-over-year. So that's the fastest pace of growth since 2011. So basically what this tells me is that the banks are lending money and people are happy to go out and borrow that money. So all you have to do is watch what the banks are doing, because at the end of the day is people need credit. You need credit availability to support these house prices. They're extremely stretched. There's a lot of leverage. And, if the banks aren't lending, then you won't have real estate prices going up. But the banks are lending, again, the fastest pace of growth in over a decade. And that's why we have nationally, 2020, as I said last show, is we hit a record for the year for home sales. So forget, 1 or 2 months. We have an entire year's worth of data, that is showing, really off the charts levels of activity.
Who is buying? Is it people looking just to upgrade their home or just get their first home?
Yeah.
Who's doing the buying?
I would say, again, from sort of my feet on the ground viewpoint here, it really is just locals right now. I think that people are honestly, the pandemic, obviously most of us haven't experienced this before. People are almost just stuck and bored at home, and they're not going out and spending money at restaurants and vacations. And, if you look at the numbers coming out from Stats Canada, it's households are accumulating a lot of savings. And I think that, they're plowing a lot of that into housing because there's nowhere else for it to go. And so I think people are kind of bored at home, and everyone's spending so much time at home that everybody kind of wants to upgrade their digs. And so everybody's, opting for more space. We're seeing obviously the massive flux out into the suburbs. And you're still seeing I don't know if I'd call it weakness anymore, but you're still seeing the sluggish, the slower part of the market really is that sort of city downtown condo, where the investors were kind of playing. But everybody is really just looking for more space. So you're seeing most of the activity coming from young families.
Is it time for the BC government to dump the foreign buyer tax?
I don't know if I necessarily agree with that. I don't really know if it's playing a role with affordability. I think that my view, though, is that, it's probably a necessary item when you consider the fact that, well, if you've got, excessive monetary policy, low interest rates forever, massive quantitative easing, you're almost forced to counteract that with, fiscal or government policy. And so I would argue that you probably need foreign buyers tax because, your prices might end up even being higher. But, despite that foreign buyers tax, like I said, it's obviously put a damper on the parts of the luxury market. But overall, you can clearly see that, the low end, mid range of the market is still moving, and that's where most of the locals are playing.
We'll have more with Steve Saretsky right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with Steve Saretsky. Steve, what do you think the real rate of inflation is?
Yeah, that's a tough one to measure. Obviously, I think that I certainly don't share the view that the Bank of Canada's CPI measure is a real indication for the everyday person. I think that certainly, the bank will tell you today it's sub 2%. They'll tell you that they have really failed to hit their 2% target over the past 10 years. And I think if you ask the average person over the last 10 years, how much the cost of, living and day-to-day expenses is going up, I'm sure most of them would tell you it's higher than 2%. So, I don't know what it is today. I would argue, at least right now during this pandemic, maybe it's, 3, 4, 5%, but certainly much higher than 2%.
Are high real estate prices important to the government?
Well, I think that, I think that my view is that, governments, well, as much as they talk about housing affordability, I think that at the end of the day, it's all their actions suggest that they're doing their best to support housing prices. And I think that when you start to unpack it from a government level, obviously, when you look at BC, the majority of their tax revenues are coming in from property taxes, property transfer taxes, real estate fees, lawyer fees off of real estate. So, I think that government revenues and the tax base is heavily supported by the real estate industry, so they're almost inclined really to support the market, and that's really what they've been doing, obviously, over the last couple decades. So I don't really expect that to change. I think that, talks of housing affordability is really more lip service than anything.
Are buyers and sellers reacting differently due to the COVID-19 scare?
I think buyers are obviously, like I said, I think from a sentiment or psychological perspective are certainly prioritizing their housing situation just because people are spending so much time at home that, again, we're seeing, you look at retail sales, you look at what's happening, in that segment of the market, and clearly, people are spending more money on office furniture, they're spending more money on renovations, kitchen appliances, because again, you're spending so much time in your house. So, I mean, logically it makes sense. It makes sense the same reason why, alcohol sales and cannabis sales are through the roof, because people are sitting at home, they're bored, they got nothing to do, and so they're getting drunk and high. And I think that people are getting drunk and high on real estate right now because, again, what else is there to do?
And you look at the way the Canucks are playing right now, you have to be drunk or high to watch them.
Yeah, exactly.
We'll have more with Steve Saretsky right after this.
Value from success, growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Steve Saretsky. Steve, even if the bank rate stays low, could there be surprises ahead in the mortgage rates?
Well, I mean, obviously we're seeing yields, start to back up a little bit. My personal view is I still think that, as much as people want to fight it or say that it's, immoral or the wrong thing to do, I still think that central banks, and they've come out explicitly and talked about it, I think they've given you that forward guidance that there will be a form of yield curve control. So I think that while yields are starting to back up on views of reflation or inflation, I still think that the central bank comes in and puts does their best to put a cap on those, similar to, kind of what the Bank of Japan does. And so I don't really have a whole lot of concerns about, yields rising materially. I think that real rates for the system is now dependent on real negative interest rates. And so, if you have a sustained return to rising real interest rates, everything blows up. So I don't think policymakers are willingly going to allow that to happen. And so I do think that central banks will continue to play a larger and larger role in the overall economy and in financial markets.
The Bank of Canada governor has indicated they're not worried about a housing bubble. Could they have gone to a special kind of math school?
I think, again, it's kind of all like lip service. I think, if you look around all the other central banks, they all talk about the same thing, right? Like, the Reserve Bank of Australia, New Zealand Central Bank, it really is all the same thing. I think they know that they're basically pitting themselves into a corner that, they have to keep printing, and the moment that you stop printing, everything kind of unwinds. And so, there was an interesting discussion, I think, with the Bank of New Zealand, where the finance minister came out, wrote a paper to the Central Bank of New Zealand and said, maybe you guys, we should consider including house prices in your, monetary policy framework. Of course, if monetary policy, these central banks really only have a 2% inflation target for the most part. So, yeah, and then the Reserve Bank came back and said, well, no, that's not our problem. That's your guys' problem. So, we're going to print. Our only problem that we have to worry about is 2% inflation. And based on our, CPI metric, we're not there. So we will keep printing. And so I think that nobody really wants to take responsibility for it. The reality is, I think you kind of have this coordinated, global currency devaluation where every central bank is trying to kind of one up each other. So, the moment that, one of these central banks, like the Bank of New England is talking about going negative interest rates, it almost forces everybody else to then go negative interest rates. Like, you can imagine if the U.S. Federal Reserve cuts to negative, like, what do you think the Bank of Canada is going to do? Start hiking rates and strengthen the loonie? No, it doesn't make sense. They're almost forced to follow everybody else. So, unfortunately, housing bubbles and asset bubbles is really a symptom of what they're doing. But they've kind of painted themselves into the corner, so it is what it is.
The CMHC predicts the most severe scenario in the housing market would be a 48% drop in home prices. Your thoughts on that?
Well, I think most people didn't actually read past the headlines. The CMHC does these stress tests every single year, so this is nothing new. They basically just do these stress tests on scenarios of what will happen to their portfolio should X, Y, and Z happen in the real estate market. So I certainly don't think it was CMHC making any predictions of 48% declines. The last official prediction that they actually made was a 9 to 18% drop in the average sales price across the nation back in April of 2020. Now, of course, if you actually looked at the numbers, I think the average sales price in Canada finished the year up 15% or something. So their forecast was completely wrong. I mean, I think that they had the right intentions. I think that back in April, it was a reasonable forecast to make. But again, I don't think anybody anticipated the amount of liquidity that was going to be pumped into financial markets, the willingness or the abundance that fiscal would supply to the market. And so, this is where we are today.
What are the likely go-to assets when quantitative easing is unleashed?
I don't know if I'm maybe the best person to answer that, but I think clearly growth is where people are focused. I mean, if people say, well, if you're going to continue to have low rates and massive money printing, you got to go to growth, and that's obviously where the tech stocks have been booming. Obviously, I think a function of that is almost Bitcoin. New technology, a cap on supply. Those have been the obvious winners, so I don't really see what would change that. But I think assets in general, I mean, stock market's going up, real estate's going up, so, certainly you can make an argument for gold as well. So I think all assets basically move higher in an era where you basically have unlimited QE.
As we approach spring, do you expect to see an increase in inventory?
Naturally, from a seasonal perspective, you'll see an increase in inventory. The problem is that you're also going to see an increase in demand. So, I think right now, if you look at the demand and supply picture, and this is very easy to understand, like, I'll be the first to admit I'm not a predictor or forecaster of house prices, in the long or medium term, but I think in the short term, you can pretty well understand just from the, supply picture of where things are going to go. So, in the next 3 to 4 months, I think the outlook is pretty clear. If you look at the single family housing market, in Greater Vancouver, you have the lowest inventory ever. The inventory for sale has never been this low of any given month, of any given year. So, how are you going to replenish these levels of supply? It's going to take some time. So basically, every time a new listing comes on for sale, every time a new listing comes on for sale, you've got 5 or 6 buyers that show up for one house. So the market is going to be incredibly competitive in the spring. I think you're going to continue to see rising prices in the near term until the supply picture starts to improve. So that's kind of how I see things playing out in the next 3 to 4 months.
We've heard people are moving from cities to the suburbs. Stats Canada says Toronto lost 50,000 people at their last count. As people get back to work in the office, though, could this trend reverse? I still think that, I take Stats Can sort of surveys with a grain of salt, but I still think, like, my personal view is that people will go back to the office. Maybe it's not 5 days a week, but I think the majority of people and the majority of businesses, once this thing subsides, in the next 6, 12, 18 months, I think that, you'll see a growing percentage of people going back to the offices and going back to a lot of their day-to-day routines. So, I think the suburbs are arguably overplayed, but I think humans tend to be sort of, I suppose short-sighted, and, I guess you can call it recency bias. As people have been moving to the suburbs, who's been buying their homes in the city?
I think there's always a demand in the city.
if I look here in the city of Vancouver, go look at, East Vancouver single-family housing. I mean, you're up at least 15% over the past year. Even the condo market has basically been flat. I mean, other than downtown, you've got declining prices, but, there's always a demand in the inner city. It's the city of Vancouver, so, there's always a buyer.
Do you have any real estate predictions for the rest of the year?
Yeah, I mean, again, unpopular opinion. I think that, I understand people don't agree with it or don't want it to happen or think that how can it continue to go up, but I think that the clear trajectory to me is higher. I think that the underlying economic fundamentals, they haven't mattered recently, they haven't really mattered in the past, and I don't think they're going to matter in the near term with, again, when you have a central bank printing as they are and the amount of fiscal stimulus coming into the market, it's kind of basically just papering over all the malinvestment. So, when I talk to private lenders, when I talk to people in the foreclosure business, and I ask them what they're seeing and are they expecting an uptick in business, what they're telling me is that a lot of people are actually getting out of private lending. People that are taking on, that had private loans or high interest rate loans with secondary lenders, they're actually going and refinancing today with the big banks. So there's an excess of liquidity that is basically papering over people that would otherwise or probably should be delinquent on their mortgages. And so, again, until that changes, until there's some sort of event in the credit market, or maybe for whatever reason the central banks are forced to stop QE, I just don't see how that's going to happen. It is what it is. I think that asset prices are going to continue to move higher, and I think it really is just becoming a loss of faith in the currency. I think the currency is if you look at in Canada, the money supply growth, money supply growth is up basically 15% in the last year. So you've added 15% more quote-unquote loonies into the system. What do you think is going to happen? So that's my view. I understand it's probably unpopular because I know there's a lot of people that question the resiliency of the housing market and the astronomical valuation levels that we have. But again, when you have interest rates at zero, hypothetically, asset valuations can go a lot higher.
Did people use deferred mortgages to save money, perhaps for a down payment for a better, bigger home?
I don't know about that. I think that people used it as just a safety net. They didn't arguably need it, but I think you had a lot of people taking advantage of the system. I think that the latest figures out of the Canadian Bankers Association is 95%, I believe. 95% of all mortgages that were deferred are back making regular payments. So, again, that's not to say there's not people under distress and you won't have delinquencies at some point in the future, but right now it's pretty evident that through all the money handouts and through these generous credit relief programs is that they have mitigated the initial disaster that everybody was kind of wrapping up for.
Steve, what's the best way to get a hold of you?
It's probably just by email, so it's steve@stevesaretsky.com.
Steve, thank you so much for chatting with us.
Yeah, thanks a lot for having me on, Jim. Appreciate it.
My guest has been Steve Saretsky. He's a Vancouver-based realtor. As you heard, you can get a hold of him at steve@stevesaretsky.com. He's available on Twitter at Steve Saretsky. If you have any questions for Steve, you can also send them to info@housestreet.com. Our YouTube channel, Talk Digital Network. Find us on Twitter at House Street. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of House Street Media Incorporated.